This trade was bullish. I got in this trade 920. The target hit 949. I was in this trade for 30 minutes and I was done trading 10 minutes before 10 o'clock. So let me explain why I went bullish and what strategy I used to catch this move. So the green line is the low of yesterday. The market opened here, came closer to the low, rejecting it, came back to this area here, rejecting it, came back again to this area here, rejecting it, and came back, like formed this trend line here. So it came back, touched the trend line and rejected, formed this wedge, flag, pattern, whatever you want to call it, and broke this wedge with the full range bar. Gives me extra confirmation. But it's not just because it's just formed a pattern here. It's where the pattern was formed. So the reason I look for a bullish setup here is because the pattern was formed above the low of yesterday. So it shows to me when the sellers come to this area rejecting, it shows to me that the buyers are stronger than the sellers in this area here. And since it's forming above the low, indicates to me even more that it's forming a bullish setup, and breaking with the full range bar gives me extra confirmation that this is a strong move. Then the buyers are very strong in this area. So the buyers not letting the sellers breaking this area. So instead breaking higher this pattern. So when this bar formed, breaking this wedge here, I enter here, my target was up here and my stop was down here, forced the push like 20 cents away from my target, and went back, retesting this trend line here again and bouncing back and went way higher than that, right? Of course. So it's a very simple way in then I use. It's nothing complicated, because my goal in trading is to simplify everything, take the trade and walk away, make money, take the trade, walk away. So that's my goal in trading, is to simplify everything. I only trade one stock, one time frame, and take one trade a day if my setup appears. I only use the 1 minute time frame. I don't use any higher time frame to do anything. I only use a laptop. I don't have any extra monitors. I don't want that. So I simplify everything, and my goal is just to make money, take the trade, make money or not, and walk away from my computer. That's my goal in trade. Even a 5-year-old could do this. This is a very, very simple approach. What makes hard is the emotions we attach with trading. Is the emotion with making money, losing money, being wrong, being right. That's the only thing, in my opinion, that makes trading hard. Because the technicals are very easy. You just pick an area in the chart, which is most likely is gonna give you usually the high and the low the previous days, not just the yesterday, but the other days also. So like this, those are the low from some days back then, and I don't even know what day. See, it's so many. So these areas are more like than not, there's gonna be a reaction to it. So you have to be, since the pattern just formed above and I was looking for a bullish setup, this is perfect. So it's very simple. It's nothing complicated. You just need to, every time you see the pattern, you have to take the pattern. And also another thing that I noticed, especially with myself, is that we have this habit of, like, for example, let's say I took this trade today. This is perfect. This fits and all the criterias in my rules. So imagine if I took this trade and it was a loss, and tomorrow this same setup appears, but then my brain wants to protect me and have this memory of a loss yesterday with the same or similar pattern. So the brain wants to protect me, and it that's why you freeze. That's why you hear people say, oh, I froze, I was trading and I froze, I couldn't take the trade, because I lost. I took a trade yesterday and it was a loss. So your brain associate what happened yesterday is going to happen today, but that's not necessarily the truth in trading. That's not, you have to forget what happened yesterday. Your goal in trading is to take your job in trading is to take the pattern. Every time your setup presents itself, the pattern, you have to take. It doesn't matter what happened yesterday. You have to be consistent. Take everything exactly the same way. That's how you build consistency in trading. But the problem is we have to be aware of that. Every time the pattern presents itself, you have to take. You can't just rely in memories that what happened yesterday might happen today. That's irrelevant. In trading, it's completely different. You have to forget that. You have to trust in your data. That's all what it is. You have to trust in your data and follow your rules no matter what. That's what it is. Doesn't matter what happened yesterday. So that's the trade for today. The trade worked, but what matters most is that the process worked. I knew my entry, I knew my stop, and I accept the outcome before I click the button. Winning days don't change the plan. They just confirm discipline. Same rules, same approach, next session. And always process over profits and discipline over dopamine. Thanks for watching.